You are familiar with gold and silver. There's a wide variety of positive and negative news traffic on social media, and it has been occupying the agenda more in recent days. Gold has started to occupy the agenda more. You can interpret these news in different ways, but one thing is clear: central banks continue to buy large amounts of gold. In this video, as we do every week, we will take a look at precious metals and the commodity market. We will quickly glance at American 10-year bonds and currencies. Let's get started. Especially after the outbreak of war, gold has gained even more attention. But there are both positive and negative news about gold. There's a significant segment of people who claim that gold is a dead investment, or that silver should never be invested in. On the other hand, there is a segment of people who believe that gold and silver have always been the only real money throughout history, and that they should be held in a portfolio to some extent. Personally, I align more with the second group because I prefer to have a certain amount of gold and silver in my portfolio systematically, and I observed a clear downward trend between 2011 and 2019. Therefore, I traded gold and silver mostly in a downward direction during that period. However, after an upward breakout in 2019, there was a massive inverse head and shoulders formation that I discussed in previous broadcasts. Since then, especially with the macro picture becoming clearer, the pandemic added some spice to it. Now, as we witness the debt crisis growing and leading to an inevitable systemic banking crisis, it's not difficult to understand why central banks worldwide continue to buy gold. So, I'm trying to keep an eye on the amount of gold and silver in my portfolio, increasing it during pullbacks and reducing it a bit during rallies. However, we still don't have a fully developed trading market for gold and silver. When silver breaks out, that trading market will emerge, and for gold, we currently have short-term trades. But I continue to increase the amount of gold and silver in my portfolio every day because I see that central banks are not making these purchases for no reason. If you look at the central banks' purchases, especially the ones in blue, you can see that their first 3 quarters of purchases in 2022 were followed by the last quarter, where a significant amount of gold was bought. If we see a similar trend in this quarter, I'll provide some data shortly. It seems like there could be a new record this quarter, surpassing 2022. Physically, significant amounts of gold continue to be withdrawn from the system. In 2022, you can see that I've been talking about it from time to time, and the American bonds caused significant losses. There are narratives like, high interest rates are going to the American dollar. But on the contrary, all the central banks in the East are selling their American bonds because they are losing money there. They don't want to carry more positions because they fear that as America continues to borrow, they may be at risk of interest rates rising further. They are especially worried about America's continuous war spending and uncontrolled expenditures, constantly raising debt ceilings, and the fear that America, at some point, will resort to printing more money, causing the value of the American dollar to drop. Especially, what Russia did to the traffic, they can do to me too. They threw Russia out of the system and made its dollars trash at the time. Russia had to carry out operations to convert some of those dollars into gold, even through Dubai and Turkey. Russia has a certain amount of dollars, so in situations like these, and why am I telling you all this? Why do central banks buy gold? Because if they were to buy American bonds, they would incur significant losses. Look, there is a possibility that they can make money with American bonds, but only if bond yields fall significantly in the short term. Yes, they have fallen a bit now, but there is not much data indicating that they will fall further in the long term. So, they don't want to buy and trap themselves here for years. They are cautious during the rising interest wave, and they say, gold is a safe haven anyway. They buy gold. Look, you can see the ratio of gold to American treasures very nicely from this chart. Since the 1970s, you can see a significant decrease from the period when interest rates hit 120%. Then, in the 2000s, we first had a gold rally and then a beautiful cup and handle formation, which seems to be in the middle stages of a much stronger gold rally when examined in the long term. On the other hand, the Central Bank of Poland made an announcement that it would continue to buy gold. Among European central banks, the Central Bank of Poland is the most aggressive in buying gold. With the gold purchases it made in the last 3 quarters, it acquired 57 tons of gold, adding to the 48 tons it bought in the second quarter. When combined, it reached a total of 105 tons of purchases, making gold account for 111% of its total reserves. The goal is to have gold make up 120% of its total reserves, as announced by the President of the Central Bank of Poland. This is an interesting piece of data. Furthermore, we see that the Central Bank of Malaysia officially announced an increase in the amount of gold in its $210 billion reserves. Another piece of data: Russia banned the export of gold. Officially, Russia has 2,360 tons of gold in its reserves, but it is known that there is an additional 6,800 tons of unmined gold reserves underground. Therefore, Russia is expected to increase the amount of gold in its reserves. On the other hand, an interesting statistic in China: the Z generation, the young generation, plays a significant role in gold purchases. Normally, the older generation would be the ones to buy and hold gold, but it doesn't work that way now. Among purchases made by the 18 to 24 age group, 37% were made by them. Here, we have an interesting statistic because a similar situation exists in India. If we assume that these young people are considered new consumers, their demand for gold and silver may change the landscape of the market. In 2024, 113 million people will be included in this group, becoming new consumers. 57% of these will be from India and China, 33 million from India and 31 million from China. What do these statistics show? It indicates that the demand for gold and silver as investment vehicles among the younger generation might continue. Moreover, there is a growing interest in gold due to a lack of trust in the system. Officials from the Swiss National Bank and some major Swiss banks, led by UBS, have started discussions on how to prevent a possible Credit Suisse-like bank run, a deposit flight. They are discussing ways to prevent and introduce restrictions on cash withdrawals in various forms. UBS has already implemented some of these measures. In reality, I'm saying that there is an unpayable amount of money in the system, and because it can't be converted to cash, physical gold and silver become important. This leads to a situation where a major problem is brewing in the system and access to your money is becoming restricted. Switzerland is one of the countries where the wealthiest rely heavily on banking services. If there is a problem there, I can't imagine what the rest of the world will face.